Welcome to Turn the Dial podcast, hosted by Scott and Renee Comey. Scott and Renee are real estate industry experts, having reached the top 1% in the nation as both agents and brokerage owners. Their insights, ideas, and suggestions will help guide you to a place where achieving your life aspirations is fully possible.
We're going to be talking about what is happening with mortgages. And we have a special guest with us today, Miss Sarah Freed. Sarah is a dedicated and experienced financial professional whose passion for helping others achieve their goals shines bright. With a diverse background in multiple financial fields, Sarah brings a unique perspective to her role as a mortgage broker. Before specializing as a mortgage broker, Sarah honed her skills in accounting, insurance, and wealth management. She has a love for learning and staying up to date with the latest trends and developments, and that really sets her apart. And she understands the importance of continuous growth and improvement, immersing herself in reading materials that range from the latest mortgage products to the history of finance and economics. She's a real mortgage geek, actually, making her a great guest to the show to educate our audience on what's happening with mortgages. When Sarah's not at work, you might find her in her garden with her plants, enjoying the beauty of nature. This morning, listening to the raindrop. She might be immersed in a captivating book or relaxing on the beach with her family. Welcome to the show, Sarah.
Thank you guys so much for having me. I'm super honored.
Well, we are certainly honored to have you and to talk about mortgage, and obviously there's a lot of buyers wondering what's going on with rates, and there's can I afford a home anymore? And I mean, all these questions have been coming up, but how has the housing market's rapid shift in 2023 impacted some of the offerings in the mortgage industry?
Well, we definitely have been watching this shift since last year when rates started to go up drastically last summer. And that's definitely continuing this year. We've got volatility in markets, some new LLPA adjustments that I'm sure we'll talk about. And you guys, as real estate agents, know there's a lack of inventory. So there are a lot of things that are kind of weighing on the market. But, those of us who love what we do, whether you're in mortgage or real estate, we work together. We have our clients' best interests at heart, and we find creative solutions. There are lenders that are kind of getting out of the mortgage space, and there are others coming in and filling that need. So although there are some challenges, there are also opportunities, and I like to focus on that aspect of things.
Yeah, control what you can, right?
Right.
When you think about that, I like that you mentioned there's some coming out and there's some coming in, and that's been really interesting. Are there any particular products that you've seen have more movement, an investor loan or a bank statement loan or construction or anything like that?
So this is the beauty of being a broker, right? I will advocate for that as much as I possibly can forever, because in the broker world, there are opportunities for all kinds of things, and each investor having their own niche, their own risk appetite. There are a bunch of different bank statement loans. There are things for investors now that we just didn't see before. DSCR loans are a big deal now. Debt service coverage ratio, where you're using the income from the property to qualify for the loan as opposed to your own personal income.
Oh, nice.
There are bank statement loans. We've got a lot of options for construction to perm. We've got a lot of options for some down payment assistance programs, things like that are helping people get into a primary residence as well, not just for investors. So there are some lenders who are doing things where they've got specialized products for helping with 1% down. UWM is a big, huge lender, as we all know, and they now are doing a program. It's very limited use, I would say. I don't like to say that they have this out for broad use, but there are certain segments of people who can qualify for UWM to actually cover 2% of the initial down payment, and the borrower pays the 1%. So there's your 3% on a first-time home buyer program too.
Crazy. Well, and so if someone
Things like
goes to
that.
their bank and gets shot down or doesn't have a program that fits their needs, sounds like they should definitely talk to a mortgage broker.
Yeah, that is that is the way. We do love to say that, we have the ability to do everything that banks can do and then some. And that really is true, where banks kind of use what they have available. We're in a position where the underwriting companies that we work with, they all want our business. So they're really encouraged and willing to work with us to get the products that we need for the borrowers that we have, and make sure that we've got something that's good for people to get into, not just a way to get a loan, basically.
Right. Yeah. It seems like I mean, some of our episodes recently have been about getting buyers off the fence, right? Because there's a lot of buyers that when the rates did go up middle of last year, pretty quickly, there was some buyers that felt like it's not their time to buy, so they kind of, and that was definitely some shock there too. And a lot of those buyers are still kind of sitting on the sidelines waiting. Maybe they're still renting or whatever. But it sounds like, at least from what I've seen and from what you just said, there's so many different things, options, products that have become available that might have changed their circumstances, that they might at least re-talk with their lender and see if there is a way for them to get back in the market, right?
I would highly recommend it. Yes. And if you're working with a bank, I would maybe reach out to a broker. I'm happy to help where I'm licensed, but there's a lot of states that I don't operate in, but there are brokers in all of them that are great at what they do. And I would highly recommend having a conversation with one, because if you are really sitting on the fence and renting right now, as opposed to owning, that's probably not in your best interest long term.
Right.
There are situations where it's what you need to do and that is what you should do. But
Sure.
For a lot of people thinking about buying, having that conversation and maybe taking that leap into equity that you can grow and keep for the future is a really good idea. And there are a ton of programs out there to make that happen.
For sure. So if that person's sitting on the sideline as a buyer, or, I've had a few of these conversations in a grocery store when you say you work in real estate and mortgage, they hear the news and they ask, are people even still buying houses? How do you respond to that?
Yes, they are. We do have a lot of people have experienced what they're thinking is sticker shock with interest rates, but historically speaking, if you average it out over time, we're not in a really high interest rate market. I mean, if we were paying 17, 18% on a mortgage, that's happened that, for long periods of time, that was the way. And we're not in that kind of market right now. There is an affordability issue in some aspects, but if it's renting versus owning, you're losing 100% of your rent every month that you'll never get back. So, when you have that conversation, and people have to buy houses, there's a lot of people right now that are saying, I'll never refinance because I got a super low rate. I don't want to move because I got a super low rate in 2020, 2021. But if your financial choice is stay where you are or be in a different place that's better for you, long term, that money difference may not really be as impactful as you think. So not only sitting down with a lender or broker, but sit down with a financial planner and have these conversations, because over time there's a lot of things to weigh there.
Yeah, we've had this conversation multiple times with some of the people that we know, actually some of our agents even, that have made that statement, like, I want to downsize. I'm an empty nester. I don't need this big house anymore, but my rate is so low. I think I'm just going to sit here for years. Right. And so then I pushed back a little bit and I just said, well, hold on a second. If you sold your big house, you're probably not going to use all of that money towards the new house. So what can you do with the extra money? Maybe you buy an investment property, right? And also the cheaper house is going to have less taxes. Maybe you're in a neighborhood right now that has HOA dues. Maybe you move somewhere that doesn't have HOA dues. So there's a lot of things to think about, not just the interest rate.
Yeah. Even things like the house is too big and I have to pay for a cleaner because I don't want to clean it all, right? Like, I mean, there's so many circumstances.
Or heat it or air
Or heat,
condition it,
yeah.
you know?
And there's
Maintenance.
plenty
Yeah. Maybe you live in a house with 2 AC units and one would be better because then there's only one that can break.
yeah, exactly. The long-term affordability, right?
Right. Yep.
Interesting. Well, we have been hearing, actually, it's been all over the place, and I've seen lots of people sharing about this new, how good people with good credit are having to pay more for their loans, so that people that don't have as good a credit can pay less. I'm kind of paraphrasing what happened, but it seems there's a lot of misinformation, and there's a lot of people that aren't saying what actually happened. So can you just kind of share your knowledge of the new federal rules that this headline refers to and how it impacts home buyers?
Sure. So yeah, misinformation is the word. That is correct. I feel like the media loves to have clickbait out there, and this definitely was utilized appropriately for clickbait, but it's not giving people the right impression of what's happening. So please, first and foremost, if I've said it once in the last 2 months, I've said it 1,000 times. Do not stop paying your bills. Pay your bills on time.
Right.
If you have a lower credit score, you will not be paying less for a mortgage than somebody with a good credit score. All that they've done is changed loan level price adjustments. I can go into a lot of technical stuff on this, but ultimately what it is when you get a mortgage rate, you get charged for that rate. If you have a higher credit score, you get charged less for that rate. If you have a lower credit score, you get charged more for that same rate. If you're going to use, to buy points or however you're going to do this, that you get charged more if you have a lower credit score. What these new loan level price adjustments have done is decrease the difference between the higher credit score and the lower credit score. So a person with a higher credit score is still going to be paying less than a person with a lower credit score, but that person with the lower credit score is going to be paying less today than they would have in December of last year. The other piece of this is that there is no difference today in rates. If you're looking at mortgage rates today versus a month ago, these things have already been priced in. They're already in the market. They've already been passed to Fannie and Freddie. All these loans that have been done, most of them since February, March, have had this already baked in. So we're not seeing anything different today than we did a month ago. We're not seeing anything shocking that nobody has seen or noticed. And we've been talking about this. I was talking about this with my team last year in December. We first started talking about it. So we've been prepared for it and watching, and it's not as helpful, I don't think, as I would like it to be. If they're really working on affordability, I don't see this as being the way. But how I feel about it doesn't change what it is. So
Can I ask you a question? I'm going to give a really elementary example, and you can tell me if this kind of works. I'm trying to picture this or say it to where someone could picture it. Like if before you got charged somewhere between $1 to $10, now they kind of took away the 1 and the 10. So now the best person with the best credit score can't pay 1, they pay $2, and the person with the worst credit score can't pay 10, they pay 9. But still the person with the worst credit score pays the most. The person with the better credit score pays the least. It just shrunk the range. That's what you're saying? Like the difference?
More or less. It's more the person with the worst credit score isn't paying 10, maybe they're paying 7, and the person with the best credit score isn't paying 1, then maybe it's 250. Like it is shrinking the gap between the two.
Yeah.
But it's definitely not super advantageous. And where we're at with rates right now, anyhow, somebody with a lower credit score is going to get charged for their rate. And it's not small potatoes. So definitely work on making sure that you're paying your bills on time, keeping your debt to income ratio down, keeping the credit card balance is low, you know, the higher your credit score is, the better the rate is going to be on your mortgage. And,
Sure.
you know, other things like the loan amount and the purpose of the loan have an impact on that too. But your credit score is a big piece of it. And the lower that is, the higher your rate's going to be, and the more you'll be charged for it.
And it's not impacting an existing mortgage. My mortgage doesn't change this month. That was
No.
issued years ago, right? So it's really, you're going to know those numbers and
New
what you're
loans,
paying when you go through the process. It's not going to be some surprise.
Yeah, this
No.
is just on the, and just to clarify this, we're talking only about the upfront cost to get the loan.
Mhm.
So this isn't anything that's ongoing once you have the loan, and it's not necessarily something that affects the rate. Although you did give the example of if somebody with not so good credit is trying to
Buy down.
match the rate of somebody with better credit, that's where that's going to cost them more, right? So yeah,
Right.
love that.
Yeah.
Okay.
Cool. So this is always my favorite one. It's my favorite one to try and answer. What about when a client calls you up, or a realtor calls you up because they're your client as well, and says, "Are mortgage rates going up or down? When's the best time to buy?"
Yes.
Exactly. I was thinking the same thing.
Yes, all three. We're good.
Yeah.
Mortgage rates are going up and they're going down. Some lenders will put out rate sheets 4 times a day, and they can do this all day long. So yes, rates will go up, rates will go down. Nobody has a crystal ball. Some of us, you know, like to speculate. I do like to speculate in the market. I've having the background that I do, I watch and I pay attention. I'm not always right, but you know, the best trader is right 51% of the time, and they're winning, you know, big. So
Right.
I don't put that into my work though. I guess that's the difference. Rates are going to go up and rates are going to go down, but the best time to buy is not the same for everybody.
Right.
You know, the best time to buy a primary residence is not necessarily the best time to buy an investment property. You know, each person has their own individual circumstance and scenario. And my advice is, if you're wondering when the best time to buy is, sit down and talk to the people who are educated on these things and can help you and guide you in that. Whether it be your CPA, your CFP, your lender, your, you know, however you're getting your advice from somebody who's qualified to give it, talk to them, be open and honest about what your goals are and what it is that you're intending to do. And they'll be able to help you figure out if the time is now or not.
Yeah. You know what? I want to add something to that too, because
Sure.
obviously our listeners are mostly real estate professionals. And I saw a TikTok the other day where somebody said, "Is now a good time to buy? It's an excellent time to buy." And here's what I'm going to tell you. And I am a very optimistic person. And I believe exactly what you said to be true, Sarah, which is for some people, it is the right time and it is a good time for them. Right. But I would never in this market say it's an excellent time to buy for anyone, because if it was an excellent time, it would be, okay, I want to get out of my rental. I do want to buy something. I'd rather start building my net worth. But it would be excellent if the rates were a little bit lower, right? Maybe it's a good time for me, but it's not an excellent time per se. So I wanted to give that example because of this. I think there is, because you mentioned, go talk to a professional, right? Go get a consult and get some professional advice. And there's a difference between the agent that a consumer can sniff out just wants a commission, right? Like, oh, you need to buy a house. It is a good time. You need to buy a house. And the professional that really listens to that person's needs and is a consultant to them, even if now isn't the right time for them. And you know what? That, by being truthful with somebody like that, after listening to what they need, is going to lead to referrals that is probably going to pay bigger dividends to you than that one commission check.
Yeah.
You know?
Sure. But also your integrity matters. And
Right.
I honestly just cannot, I don't think that you could ever throw a blanket over it and say it's an excellent time for everybody to buy, or it's a terrible time for everybody to buy.
Right.
I mean, I just can't get behind that. And there are a lot of people who do that. You're absolutely right. And there are real estate agents, but there's also a lot of lenders who do the same thing. You know, they're after the commission, after the numbers, and what impact they have on the people that they're seriously impacting. Real estate purchases are huge. You know, for a lot of people, that is the biggest purchase in their whole life, whether they do it once or twice or 5 or 6 times. That's a huge purchase for people.
Right.
And it does have a lot of impact on not only their financial security right now, but their legacy, family, you know, money that goes down through the generations. So that's something that you need to be very careful with. And I have a lot of respect for people who will say, hey, this is not the right moment for you,
Right.
or this is not the right house for you. You know, I have hated saying that to people, and I have before. You know, I know you really like this house, but I don't think this is the right place for you. I don't think this is the right moment for you. And for me, you know, that has financial impact on me if I'm not getting paid to do it. But the cost of getting somebody into a situation that I'm not going to be proud of is way higher than whatever financial cost that is to me. So I would far rather be an advocate for my clients than to have a commission.
Yeah. So finding that person you do know, like, and trust, that'll really help you sit down and weigh the pros and cons for you. And by the way, even when it is the best time for you, there's going to be something on the con list. Otherwise, you didn't really think about it. Even when it's the worst time for you, there's going to be something on the pro list where you didn't really think about it. And then it's just
Definitely.
figuring out what's the best time. And I love how you talked about being open and honest about your goals. I think the culture that we're raised in is really not to talk about money. We don't educate children about money unless the parents do. It's really not something happening in schools. You know, a couple kind of cool programs, but not federally, not blanket wide. And so we aren't always comfortable really sharing what our goals are. And if you can help someone feel comfortable and let them know, like, whatever you say to me is just a conversation. I'm not going to go around and tell everyone your fears about your, you know, money fears or future fears or dreams or hopes or anything that could be manipulated. But you got to share what your goals are. And then you also have to acknowledge your goals can change. So your goal today could be totally different than 5 years from now. And that's okay too. If we think that's going to be your goal for the next 2 to 5 years, then we can make one plan there. If we think it's going to be your goal for the next 10 to 20, we can make a different plan, right?
Yep, love that.
And that's very important to put all of it into perspective when you're having these conversations too. Like, okay, I understand you're changing jobs, you're, you know, need to relocate. This is what you're doing right now. What is your 5-year plan? What is your 10-year plan? Because this is a big decision. So let's fold all of it in at the same time and make sure that whatever you're doing is the best case scenario.
Yeah.
Love it. Well, we've got a few final wrap-up questions that we like to ask all of our guests. And so I'm going to start with the first one, which is, what is the best piece of advice that you've ever been given?
So I knew you were going to ask me this, and I struggle with this. I am a reader. I like to read a lot, and I like to have conversations with people, and I have gotten some excellent advice over the years in all kinds of different realms. But I think the most valuable, and one of the things that I consistently have conversations with my children about, this is kind of how I weighed it. I don't know, what's the best advice? Well, what do you say to your kids all the time? Because clearly that's, you know, impactful.
Right.
Be yourself. Be 100% of yourself all the time.
Yeah.
Even when it's embarrassing, even when it's, you know, maybe not the most professional thing to do, or the most, you know, however it is that you're being yourself, if you're authentic, that's going to not only let people know, like, and trust you, but it's also going to lead to you being more fulfilled. I think we've all been in situations where we feel like we're holding back, feel like we're not being true to ourselves. And that's such an icky feeling. You know, I know that maybe not everybody is everybody's favorite person or everybody's favorite friend, but that's okay, because you don't have to be. There's 8 billion people in this world. And if you're true to yourself, you're going to have a much better go of it.
Yeah. And you definitely be watering yourself down if you're trying to be something for everyone, right?
Oh gosh. Yeah.
Right. Yeah. Can't do that.
Well, cool. And we know that you're a reader. So is there a specific book that you felt like has kind of helped shape who you are today?
All of them.
Pick
You
one.
know, yeah, I don't feel like I've ever read a book and said, well, that did nothing for me. You know,
Right. Right.
I don't know. I like Jordan Peterson. He is a little bit of a controversial character sometimes. People have their thoughts and they either love him or hate him. I think he's very misunderstood. But he's got a bunch of books that are beautiful. Maps of Meaning is a little bit of a deep one. But it's incredible. If you can get through some of the minutia in there, there's just so much about how the human mind works and how to not just be yourself, but be the most optimal version of yourself possible. He's incredible.
I haven't heard of it. Now I'm going to have to check it out.
Love it.
Yeah.
All right. And then what is, if somebody wanted to get in touch with you, wanted to pick your brain about mortgages, or potentially had a referral for where you are licensed to do loans, what's the best way for them to get in touch with you?
You can find me on social media. You can find First Home Equity Loans. Our Myrtle Beach office has a Facebook page as well. firsthomeequityloans.com. I'm on there. LinkedIn, Instagram, all the usual channels. Or you can reach out to me directly. If you find me on any of those channels, reach out. I'm happy to talk all the time. You can call me. I'll give you my phone number.
Perfect. And what states are you licensed in?
I personally am currently only licensed in South Carolina. We're working on North Carolina. Our office is also licensed in Florida and California, Michigan, Alabama, Tennessee. There's a few. We're licensed all over.
Nice.
Very
Perfect.
cool. Exciting. Well, that was some great information. And hopefully, as you've listened to this, maybe it just helps you feel more confident having conversations when someone asks you what's happening with mortgages. I think some huge things that came out is affordability can be just as much of an issue, right? If we're renting than if we're owning. So we kind of have to work through those things. We have to acknowledge that there is a lot of misinformation out there. So if we're getting our information from the media, maybe looking for that expert that's educated, qualified, and individual to tell us what that means, what that headline actually means to us. And that rate doesn't equal the best time to buy, which I very much appreciate, right? Everyone's scenario is extremely different. So being able to be that person to help someone make their pros cons list and realize what's the right choice for them. Because none of us have that crystal ball, even if we like to speculate. And I love that mention that the best trader is right only 51% of the time.
Yes. Well,
yeah.
Thank you so much for being on our show. We really appreciate your time.
Thank you guys for having me. I'm very honored to be on your podcast, and thank you for sharing your valuable time with me today too.
Awesome.
Thank you for listening to Turn the Dial Podcast. Please check us out on Facebook or TikTok at Turn the Dial Coaching. We would also love for you to subscribe to our show and rate us on iTunes, Spotify, or wherever you listen. For more information on our coaching programs, please go to turnthedialcoaching.com. Thanks for listening.